Welcome back to Kitco News. I'm Jeremy Szafron. Well, we begin with a major shift out of Washington. A brand new Federal Reserve survey says that the trade war and the runaway U.S. debt are now the number one threats to Americans' financial stability, surpassing banking stress, real estate, and even geopolitics. Now, markets are already reacting. Gold has rocketed to record highs near $3,500 an ounce, and Bitcoin hovers at $95,000, waiting for its next move. Now, my guest today is Clem Chambers, our friend, CEO of Online Blockchain, founder of the new platform, anewfn.com, and a longtime Forbes columnist known for his bold, outside the main market and mainstream calls. He's here to reveal how the Fed's new flagged risk might catapult gold to 5,000 or maybe slash Bitcoin in half, rather. Great to see you, Clem.
Good to be back.
Okay, let's start with this new study, the Fed Financial Stability Survey. 73% of respondents have ranked the trade fight as the top danger. Half of them fear broad policy uncertainty, and worries about the U.S. debt sustainability are climbing fast. What's the single domino that you think falls next here, and how systemic could the damage be?
Well, I mean, what always worries me in situations is what people don't talk about. So if the market's falling and everyone's saying, oh, it's falling, it's terrible, oh, it's awful, I'm not so worried. If the market's rising and nobody's saying it's rising, then I'm not so worried. It's when it goes quiet that things can happen. And, you know, what's happening now is no one's talking about the supply chain. Mm-hmm. And if you imagine that 30% of American food is packaged in Chinese packaging, and that the supply chain may just be a big empty pipe moving down towards America, how's that going to pan out? If you know, the food packaging isn't bought because now it's so much more expensive, or it is bought, and that would mean 4 or 5 or 6 or 7% food inflation. I mean, that's going to be bad when the day comes when the supply chain empties and stocks aren't there. And we're talking about plastic film here and, you know, little blue packets that you put your chicken wings on. If they don't have them, you can't have your chicken wings in the supermarket, can you? And it's things like that that no one's talking about that makes me worried, because it's like everyone's gone quiet. It's if Trump doesn't do some incredible U-turn, which is not really his style, then what happens next is going to be really dramatic, and people are going to be shocked. Because what I pick up is a lot of people have been in the market for so long, and it's been so good, and it's by the dip, and nothing can go wrong, and good old Fed put is there, and it's all going to be fine, and don't worry about the valuations. It's all just going to be hunky-dory. That they believe that this is the case this time. And that's the only call you've got to make is it just the same old? It's, oh, buy the dip, it's all going to be fine this time? Or is this something completely different? Is this something worthy of a long-term bear market? Yeah. And, you know, if everybody was worried about the supply chain and there not being any plastic or plastic trays for chicken wings and steaks and to wrap up food for the supermarkets in, 50 days' time? If they were panicking about that, I'd be relaxed, because they'd be panicking about it. That's all going to be fine then. People are working on it, but it's all quiet. And this supply chain, if it's simply not coming down the pike, and a lot of numbers say the stuff is not on its way from China. Well, what happens when suddenly there's no containers full of stuff? What happens then? And, you know, that could be a big shock, and that shock could start an avalanche. And so I'm just sat here thinking, well, you know, I hope they've got this covered.
Yeah, interesting. I mean, to your point, Apollo's Global's Torsten Slok lays out a grim timeline. He says empty shelves by May, trucking layoffs, a recession by summer, all tariff-driven. Do you agree that this is the major risk here? I mean, is it more than just inflation?
Well, yes, because the whole economics of comparative advantage has made the world rich. Yeah, people don't make stuff in different countries for no reason. They do it because it's more efficiency. And really, economics is about efficiency. It's more efficient for America to have buildings full of programmers being paid £250,000 by Facebook and Microsoft and Nvidia and all those things than to make shoes. The only reason to make ships The only reason to have steel, the only reason to have basic manufacturing is so you can fight a war. If you're not going to fight a war, you don't need this stuff. You don't need to have a shipbuilding industry if you're not going to fight a war. But apparently America needs a shipbuilding industry, and it needs to protect its steel industry. Steel is for war. Aluminium industry, all these basic manufacturing industries that won the Second World War, that's what Trump is trying to get back into America. And that is the biggest worry of all, isn't it? And that's why gold's gone up.
Well said. I mean, that is the macro backdrop. And now let's turn to that metal that usually loves a crisis. You bring up gold. Last time we had you here on the show with us, you said that rising global tensions were likely to keep gold climbing. And that call has been spot on, with gold recently smashing through that $3,500 last week of new fresh record. Now, you've warned before that gold is the asset of conflict. Walk us through what's happening under the hood here. I mean, is it the same as the war premium that you've warned about, or has something else started to push gold even higher?
Well, the big short-term pusher of assets is liquidity.
Yeah.
And, right now, to an extent, the fairy godmother of all American institutions is the Fed. Because they're the guys that step in and bail everything out. And if they didn't do that, then everything would crater into a smoking disaster and everybody would be in a terrible position. And if you take COVID, where the world stopped for quite a long time, well, of course you're going to get inflation, because the only way you stop there being an economic meltdown is to print money. That's why inflation is generally created after wars, and why South American countries do it, and everybody does it. All the governments do it. They make inflation to paper over the lumps and bumps and the crooks and nooks and crannies of a broken economy. And the more broken your economy, the more inflation you get. And it's the only way to, in a sense, renege on your debt, or paper over a chasm that can be caused by a systemic problem like COVID, or a massive global trade war, for that matter.
Yeah, has this run surprised you on the gold front? I mean, you floated 5,000 as the next waypoint, but pin that down for us. I mean, the catalyst, time frame, and does the real yield still matter here?
Well, for me, I just trade what I see. And I liked gold back in the day because COVID meant inflation, and therefore gold should run. It's the first chapter in the book of investment. Inflation equals gold goes up. Okay, and it didn't. So I was a bit interested by that. I was a bit fascinated by that. So I began watching it, and suddenly it was making what I considered the classic pattern of a breakout. That meant it was going to run, and it did. It broke out and it ran. But when you get that classic pattern, it's because there's a driver behind it. And you've got to work out what the driver is. And I was scratching my head. Well, is it electronics? No, that can't be right. Are gold teeth fashionable again? I don't think so. Is everyone buying Rolexes? Well, they are, but not that many. What is going on? What is the underlying core driver of gold? Who's the big customer? Well, it's government. Well, why do they bother with gold? Because gold is for war. That's it. Gold is for war. So it's breaking out because people are getting sweaty. Governments are getting sweaty and they're buying gold. Well, even Poland is loading up on it. Well, they've probably got a good reason to load up with it, considering what's going on in Ukraine. That's a perfect example of that. And of course, China is the pivot point of all this. Well, actually, Taiwan's the pivot point. But it's obvious now to anybody that there's a Cold War between America and China. Well, China's going to buy gold, aren't they? And, you can be an investment bank and you can be pushing around retail investors, and you can be fixing the gold rings in London, and you can be mucking about. But when the 800-pound gorilla comes out and is now the buyer, you can't be short gold. You have to let gold run, don't you? When China and Poland and who knows however many other countries are buying gold in to stock up for increasing tension, then you've got to get out of the way. And then when does this tension end? I mean, there's no end in sight. There's no Gandhi on the horizon. There's only a load of stressed out, political leaders all over the world. I mean, the only ones that seem to be relaxed up until a few weeks ago was India. Now even they're in a conflict. Yeah. So, that increase in tension, to me, I think that was going to be inevitable. But that is the sole thing that you need to drive the gold price. They make 3,200 tons a year, and a ton is 100 million. Well, if you want to buy the bullets of war, which is gold, they're golden bullets. Well, there's going to be a big demand, and there's going to be no manipulation, no market corners. Everyone's going to get out of the way of that, and the thing's going to fly. And it's been flying. And then if you go, right, well, if there's this driver, what happens next? Well, you get into this, ramping cycle that we're in. And that ramping cycle, initially I thought was 3,500, and now looks like 5. And now it's potentially 10. Wow. Now, that's not fate. But, if the tension keeps getting worse and worse and worse, then, the sky is the limit, because gold is the only currency in international conflict. And if the more people that are in international conflict, the more demand there is for it, the more intrinsic value gold has, because that is the fundamental use case. Yeah. So, every turn of that screw will see gold go up. And I hate it. I don't care that I've got a lot of it. I just hate it. I would prefer to, grow my orchard and pick my apples and plums rather than worry about all these highly strung leaders trying to make a point about how powerful they are.
Yeah. I wonder, you talk about $5,000, $10,000 gold. Robert Kiyosaki, who we've had on the show numerous times, just tweeted a jaw-dropping forecast. 30,000 gold, 3,000 silver by 2035, calling for a greater depression. Credible pathway, social media, hyperbole. What are your thoughts?
I don't think there's enough time for it to get that bad, because this is my prediction, and I'm sorry to interfere in your elections, being that I'm a Brit. But I think by the time you get to the midterms, everyone's going to be so fed up with what brought the world to that point that the Democrats will get in. However, useless they are, they will just swing into the Democrats and they will shut that down. And so it's really about the midterms. It's all about the midterms, and they're 18 months away. So you've got 18 months of this move, because people are not dumb. I mean, there are dumb people, but when it comes to their well-being financially, you'll be amazed how many people perk up and get their brain in gear. And they will see. Remember, the Chinese supply chain is 75 days long. We're already 20 odd days down. So there's 50, 60, somewhere between 50 and 90 days before incredible stuff could happen at retail. Yeah, and everyone's going to notice that. No one's going to think that this is a great thing. So unless, and he does lots of fancy footwork, and the market is saying he's going to. I mean, that's pretty much really what the market is saying. They're either like ostriches with the head in their sand, saying, no, this can't possibly happen. No. It's Tina. What's it? Is it? I can't remember now. There is no alternative. It's Tina. There's no alternative. It has to go up. Otherwise, I'll be sad. They're either being a Tina ostrich, or, they're right. It's all going to come good, because they're not going to be doing this body slam of international tariffs. Yeah, but, they're running out of time pretty quick. It's only days away, 75 days to the supply chain and being as empty as it's going to get. And then whatever is in stock.
I mean, it's been busy around our newsroom covering it all. Okay, yellow metal we covered. Let's flip over to the digital side. Bitcoin's holding about $95,000 after flirting with 6 figures back in December. Does it need a fresh macro shock to clear 100 grand, or is liquidity already doing the heavy lifting here?
Well, I mean, one of the reasons I'm not a fan of the markets over the last few years is they're highly curated. Yeah, they're not good old days of free markets. And basically, as I said, the Fed is the fairy godmother of America. And, if things go pear-shaped, they will pull the lever of print. They will QE. They're not QEing. They've stopped QTing. And they aren't really, they probably are QEing, but, in a way that people don't really realize how they're doing it. They're probably twisting and bending the curve and all that good stuff. But, if things go badly south, they will do what they always do and always tends to work, which is print money. And, at extremists, they print money and they give it to the government. They said they don't, but they do. right? And if it's not quite so bad, they go around everybody and say, have you got any dodgy bonds? We'll buy them off you at an inflated price. Come on then, give it to us. Here's some cash. So they will liquefy the markets. But that, of course, ends up going into all sorts of frothy assets. Bitcoin, for example, that could happen. Mm-hmm. However, that's not fate. It's up to them. If they go, well, if we pull this lever, there's going to be inflation, and then I'm going to get blamed for it. I'm not going to do it. They said they don't want inflation. They said we're bad people, and they don't like QE. They've told us a million times that they think we're evil because of QE. Well, we won't do anything. And then that would be interesting. Just put it that way. Yeah. So there's a fork in the road. Will the Fed pull the QE lever if it hits the fan? If they don't, then there'll be hell to pay. If they do pull the lever, there will be significant inflation. Maybe not runaway, but you're looking back 5, 6, 7% again, 8, 9%, right up there. Good, solid, nasty inflation. Yeah, and then of course everything will go up, and Bitcoin is the frothy asset for that sort of thing. So it could go right for Bitcoin. My model is a bit different. I go, gold is for war, Bitcoin is for flight. So if there's any group of people that need to leg it out of their town, Bitcoin will do on a run. And there's so many groups of people that might have a need to flee at the moment that I think that's a potential, is a support. I think what you're seeing now is that very thing. Mm-hmm. That is a support for Bitcoin. Without it, it will be much lower. And you can look at the previous cycle when there was a double top, and you can say, well, that second top was Afghanistan. Because if you are in a country which is all the rich people that have been plundering the country have got to flee, they're not fleeing with gold, they're fleeing with Bitcoin. So, they will load up on Bitcoin before they have to head to the airport. So you will see whenever there's a group of people that go, oh, this is a bit too spicy for my liking, I'll put 10% of my net worth into Bitcoin, you will get that jump. But if that goes away, then it's coming down to 60,000.
Interesting, because you talked about this back in December when we had you on the show. You told us that Bitcoin was close to topping out, maybe around 100 to 120,000. You warned about a potential 50% crash. Here we are, months later. Obviously, despite major moves down, Bitcoin's still here, holding up 95,000. Do you still think that big that sell-off is coming, or has Bitcoin proven to be more resilient here?
It has a use case.
Yeah.
Bitcoin is not. I didn't hit $100,000 because it's a useless thing. It has a use case, and it has value, and it has followers, and it has great branding power. But if you look under the bonnet of crypto, there's not much else doing at all well. Mm-hmm. In fact, it's just Bitcoin, because that has this use case of being able to move very large amounts of money really quick in a way which is transparent of your need to show it at the airport. You simply can't get through the airport with 100 million. You just can't do it, right? Bitcoin, it's left the moment you own it. So, that has a fabulous use case in a world of increasing tension, because in all these things, there are winners and losers, and the losers who've got money and have to, leg it will be doing that with Bitcoin. And, in countries, they really do loot their countries, and they really do end up with hundreds of millions and sometimes billions of dollars in cash. And of course, where are you going to put that? If you looted your country, where would you put it? You can't put it in gold. Yeah, you've been siphoning it off into Switzerland and all those offshore places and all that stuff, but suddenly you and your family have got to head to the airport. Well, Bitcoin, or think you might have to in the next 30 days, Bitcoin is the natural place. So gold is for war, Bitcoin is for flight.
Mm-hmm. Yeah, well said. Last time we spoke, you said that you were all out of Bitcoin. You kind of sold it. You had some Ethereum, some Solana. Has your position changed, Clem?
I've got less Ethereum. I have a major problem with crypto, and that is now it's connected to Wall Street. It will be normalized, and Wall Street, they buy their yachts and their mansions and fly in their private jets off the back of the investor and trader. Yeah, they take assets and they drain money out of them. Yeah, and once you connect up your wonderful new asset into the nervous system of Wall Street, it's going to be a constant drain, and it's already high. And I don't, therefore I kind of feel that this run is over. It's not over for blockchain. It just may have run much of its course for crypto. So the days of going from 100 to 1,000, from 1,000 to 10,000, and 10,000 to 100,000, I think that's over. And now you're into incremental gains. And, in equities, when the equity markets aren't being crushed by all sorts of craziness, it's just as much opportunity. And gold, there's just as much opportunity in gold right now as I think there is in Bitcoin. I mean, Bitcoin going from 95 to 110, I think that would be remarkable. But gold going from 3,000 to 4,000, similar sort of move, I don't think it would be any more or less remarkable. And therefore, I think that, I'm the days of doing 10x are over, and they were very good to me.
Why less? Why less Ethereum here, my friend? You just been selling that dip? What's been happening?
Look, the wonderful thing about Bitcoin, or the least not wonderful thing about it, is that there's no single. Satoshi Nakamoto is dead, or gone, or dead and gone. Okay, he can't come along and go, oh, didn't mean it. Oh, I want to do something different now. Oh, I think we need to change the white paper. I'm going to recode it. That can't happen. Whereas all these proof of stake coins are basically oligarchies. Okay, a group of people fighting over power and dominance. It's the same old story since the beginning of time, and that doesn't end well. So if you've got some genius, mercurial genius, that has invented something and made himself a zillionaire and he's never been wrong, and then suddenly he's wrong, and it all goes down, doesn't it? And I think if you look at Ethereum, it's basically degenerated. It's lost its primacy, and therefore it's gonna dwindle and wither like most of the other ones. In fact, probably all the other ones will be replaced at some point by something else. Yeah, and so I've lost a taste for it because everybody I know has been robbed or even mugged in the street because they had something to do with crypto. Basically being attacked with machete in Spain, or had their wallet emptied because they clicked on a bad link, or somebody stuck them up outside of a conference, or hacked into their phone in a conference, and stuff like that. And that just doesn't happen in equities. And that existential risk of holding crypto just makes me lose my excitement for it. I can't really go big enough in it without having to have a bodyguard. So I prefer to be not worth stopping in the street and having my mobile phone grabbed. Not that that would do them any good.
Yeah. Well, you always talk about Wall Street and the fact that you don't like that they've kind of gotten involved with the crypto community. On the regulation front, I mean, the Fed last week scrapped its pre-approval rules for banks dabbling in crypto, echoing similar FDIC moves. Is the U.S. finally thawing towards these digital assets? And could that maybe move up the price needle, or will people come back in?
Well, you see, that's the thing. You've summed up in a nice ball. What's the problem with crypto? Everybody thinks of it as money and cares about the price. That's the only product. It's basically a replacement for Las Vegas. It's all about gambling. And that's a fantastic use case for crypto. Gambling, that adds a lot of value to crypto because it's a use case for it. And, you've got very few other ones. But the real use case is the blockchain and what it can do for all sorts of incredible things. But what America has done wrong up to recently is they've made it impossible well, not quite impossible, but extremely difficult for legitimate businesses to partake. Yeah, because it's too dangerous for them from a regulatory standpoint, from a law and order standpoint, from a legal standpoint. There's just not, the only people that would want to play are either people that got in so early they don't know any different, or people that are basically so risk hungry they don't care what rules they break and what happens next. And that stunted the whole blockchain world. But now America's regularizing it out and enabling people to say, well, I'm a proper business. I'm not spicy. I don't want to break any rules. I can just read this book and I can do a business, and that's fine. And I won't get my bank account seized, and I won't have the FCC coming round, or Homeland Security, or whoever. I won't get stopped at the airport. So that will enable the true value and it is huge, of blockchain to start to grow and flourish. If you go back 4 years, there's very little today that wasn't already there 4 years ago. And the reason there's been no breakthrough revolutionary developments is that you'd have to be off your head to enter the market, where you could get thrown into jail by the American government on a whim. And that really regulation by enforcement, that's going away, and that will open the door to this incredible technology to actually add huge value. So I think that's what's coming next. But I don't think it will be dominated by cryptocurrencies.
Interesting. Okay, well, speaking about bank accounts being seized, before we continue, a quick update on the major political shift just north of the U.S. border. Canada has just held one of its most historic elections, and at the start of 2025, it looked like the Conservatives would cruise to victory. But in a stunning comeback, the Liberals, led by Mark Carney, have pulled off a win. Now, Carney is the former Bank of Canada and Bank of England governor, and they'll now form a government, likely a minority or possibly a slim majority, depending on final count still coming in. Now, Carney says that the old U.S.-Canada relationship is, quote, over, and vows to forge stronger ties with Europe, UK, and Asia while renegotiating trade with President Trump on, quote, Canada's terms. Meanwhile, Trump has weighed in directly, suggesting Canada should simply become the 51st state, promising no tariffs, more U.S. investment, and what he calls the highest military power for free. Clem, how do you see this Canadian election result impacting U.S.-Canada trade negotiations, and could it spill over into, broader market volatility?
Well, there's an interesting thing about Carney, which I learned from people that actually, had dealings with him. He's apparently the world's most charming man. So I don't know how that's going to get on with Trump. But, he's in a sense, if you look at Italy and you look at Super Mario, he got to be Prime Minister of Italy. And he did a good job until he got fed up with it and said, no, you're all a bunch of kids. I'm going. If you can't behave like grown-ups, there's not much point in me being here. And so there's something quite, I'm not a hater on central banks. They are some seriously heavyweight people. And Mark Carney is a seriously heavyweight guy. And he's also incredibly charismatic in a sort of quiet way. So everybody that I know that's had dealings with him has considered him to be like massively charismatic in a way that you wouldn't necessarily pick up. Yeah, because if you look at somebody like his predecessor, who was massively charismatic up front, and like Macron, he's hugely charismatic up front. He's got a sort of incredibly, humble but powerful charisma. So I think that's probably, a good choice for Canada in at this stage. Mm-hmm. But I mean, the 51st state of America, I mean, it's just a troll, isn't it? And I don't know what it says about the world that rulers with massive power want to go around and troll people. I mean, that's the new thing. It's this desire to troll everybody, which is, new and revolutionary, and frankly, relatively, I think, dangerous and bad for everybody. But if you want to look at a time where people were behaving like this, it's actually the French Revolution. Mm-hmm. And that was a catastrophic moment, absolutely catastrophic moment. France never recovered from that. They had 30 million people. Germany had 6, Britain had 6. France has now got 60 million people, twice as many as they had before the French Revolution. And Germany's got 10 times as many, and Britain's got 10 times as many. So, this kind of wild behavior, wild attempts at turning everything upside down, don't know. I don't. Yeah. I'm not out of the markets for no reason, and I'm not heavily in gold for no reason.
Yeah, I wonder, because Carney says that he wants to build stronger ties with Europe, UK, Asia. Do you think that they'll be able to do that more than the U.S. side, or do you think that they'll be able to renegotiate something with Trump here?
Well, the American exceptionalism is gone, isn't it? It's dead. And you can see that by where all this is now. Because, presidents used to walk quietly and carry a big stick. Because they could, because they did have all the cards. Yeah. And I mean, what happened if I was China, they're doing it, aren't they? They're saying, yeah, okay, then fine. Let's see what happens next then. Hey, you can't make light bulbs. What are you going to do for light bulbs? Oh, you can't make shrink wrap for your chicken wings. Oh, what are you going to do then? Oh, you can't make chips. Oh, what are you going to do then? So, if I was trying to get my acting back in order to be able to compete with China, I would be being quiet about it, not eliciting a head on with this. I think that well, we'll see. We'll see. I mean, the market says Trump isn't that far wrong. And if it isn't people with their head in the sand, if the market is right, well, good luck to him. But if he's wrong, I tell you, we're going to see the market's going to halve.
Interesting. In that scenario, then let's talk portfolio strategy. I mean, if we do see and hit a trade-induced downturn, how would you weight gold, Bitcoin Cash, and equities today?
Well, look, it depends on how fast it happens. You saw how fast it nearly happened. Well, in fact, the UK has recovered pretty much the whole way. I mean, not totally the whole way, but much better than America. So what you've seen is the American market has said, oh, this is not good. This is not good, but not as bad as it could have been. Yeah. And overseas markets, stable markets, have done a lot more recovering. So really, it's a blow to the US as far as the market is concerned. But it's not as catastrophic as I and many others think it will turn out to be. So that would suggest that the average person thinks it's something else, something good will come of it. It's not going to be just terrible. Or they're going to change course here. They're going to do this there, and it's all going to work out. And in my book, I think that people are living in a cycle of grief, and they're at the denial stage now. And that will change. And when it changes, you'll see another leg down. However, the market doesn't listen to me. I listen to the market. And if Trump's glorious battalion of geniuses can pull off this maneuver, then, yeah, it will just be a blip. But, I mean, please, people, just send me an email telling me how this is all going to go right. I can't see it. Tariffs are going to be damaging for the world. So a global recession, well, that's not good for anybody, right? That's not good for America, not good for anybody. Yeah. And it's going to take a long time to unpick all this mess. It's just everything's gone in the air, and it's going to fall where it may. And it's going to be a less rich world at the end of it in the short to medium term. Now, in the long term, it might be marvelous. But in the long term, that's going to be quite a long time, I think, at least 10 years to get back on track from this.
Interesting. Okay, so are you playing the Buffett card then? Or you mostly cash at this point, cash in gold? You're out of the stock market.
I want to say 100% cash, but it's not true because I can't actually keep my hand out of it because there's occasional things go by and I go, ooh, that's yummy. And the defense stocks are yummy. And there's a few companies which might be yummy. And the UK market is yummy. But I would say if you take out the gold, I'm only 8% in stocks. And I'm therefore, gold plus 92% in cash and gold, or cash and precious metals to be accurate.
Interesting. Okay. Now, online blockchain obviously focuses heavily on tokenizing real world assets. You just mentioned to me off camera how much you love to pick apples out of a good orchard. Do you think people are buying things like that now? Talk to me about which asset classes or sectors look most resilient or even most profitable if this tariff and trade fragmentation and financial chaos continue.
It's extremely difficult. The obvious answer is to be short, but I'm not a shorter. I mean, it just doesn't suit my personality. I prefer to just sit there and watch the world go by than be short. So there is that. There's obviously, if you're into trading and it's all short term, you can do pretty well with that. Once it's all settled, like say in 3 or 4, if it crashes, make sure that you get the last leg of the W, before you get back in. But of course, a crash is a fabulous time to enter the market. And that's been a very good thing for me over the years. I've done very well getting out near the top and getting in near the bottom for pretty much every single crash after the .com. In fact, all the crashes after the .com.
Did you get in there? Did you buy the last haircut, Clem? I mean, when we saw these, NASDAQ, we saw the S&P, it just took a huge hit after these tariff announcements. I mean, it's come back quite resilient now, but were you buying that dip?
I don't buy the falling knife. And I don't buy V-shaped crashes because they're very rare. The last one was COVID was a V-shaped crash, and I kind of left it until kind of started to make a W, but it obviously there was massive intervention. And what I see at the moment feels like intervention to me. And when the intervention goes away, when the systemic risk of failure goes away, then the intervention goes away, and it will go to where it should go to. Okay, and that would generally make a W-shaped bottom. But what I see now is just you can see it at the beginning of the dot-com crash. It's the same sort of shape. And it's the same sort of shape at the beginning of the 2008 credit crunch crash as well. And, it's just like, oh, there's a crash, oh, no, buy the dip. Oh, no, it can't be that bad. Oh, yeah, there is no alternative. It's all going to be good. And there it is. Yeah. But if it isn't, like those two crashes, it then rolls over and does the big leg down. And until this supply chain is established in my head, what's going on with it, I'm not playing. I don't mind missing upside. I don't mind missing anything. I will just sit there, because if suddenly the last container drops out and there's no more behind it, or not enough to pack your hamburgers, then all hell's going to break loose, right? Because if you can't get hamburgers in the store because there's no packaging for it, 30% of American food packaging comes from China. I mean, that alone, you can blow that out into all sorts of formats, right? Rubber washers, probably nuts and bolts, just the whole lot, right? And everybody's been running all this just-in-time stuff for the last 20 years. I remember Jobs saying, we don't hold stock. Our suppliers hold the stock next to our warehouse, and they put it all together and they stick it in our warehouse. We don't want any of that. Yeah, well, that's just great. And if you don't have tariffs. Mm-hmm. Yeah, so this hollowing out of American manufacture, that has happened. Yes, all the things that have happened have happened. But if you slam down that supply chain and it doesn't, they don't keep it full. Well, what happens when you can't get sausages because those little blue dishes, there aren't any left? What's going to happen in America when that happens? What's the outcome for that? Well, it'll be pandemonium one way or the other, won't it? And so until that, remember, 70 days plus stocks.
Well said. All right. Clem Chambers, let's leave it there, my friend. CEO of Online Blockchain and founder of AnewFN.com. Always a pleasure having you on. Great insight there, my friend.
I hope I'm wrong. I really, really, really hope I'm wrong. I have no fun making money out of people's troubles. I really don't.
Yeah. Well said. All right. I appreciate your time. Thanks again.
See you.
Thanks, Clem. And for more expert interviews and real-time market coverage, be sure to like, subscribe, and turn on notifications right here on Kitco News. I'm Jeremy Szafron. Thanks for watching.